In trading, knowledge is not the power, applying knowledge is. Welcome to the Ultimate Forex Strategy series, an 8-power journey built to transform the way you see, think, and trade the market. Each episode uncovers a battle-tested trading approach from the trend trading and range setup to the news, retracement, and grind strategies, giving the exact tools professionals use to stay consistent in any market condition. And today, we begin here, episode 1, the trend trading strategy that is going to ride the market waves. In this lesson, we'll decode what's a real market trend look like, how to identify it early using the moving average and trend lines, and how to hide with it. Confidence from smart entries to the solid risk control. No flap, no theory, just practical trading strategies and measure here step by step. So get ready, because this is where your strategy evolution begins. Welcome to the Forex Strategy. Ensure that you subscribe, like, and follow all the episodes that we're going to have of them, 8 of them. Now, as you can see right here on my screen here, I have GBP JPY. And you know the big thing about the GBP JPY, the first thing that we actually have to start with is actually knowing and identify where the trend is going. Where is the trend of the GBP JPY going? That is where you have actually to start. Before you just move that, you have actually to identify at least this on the highest time frame, and I'm going to select the daily time frame. The reason I'm selecting daily time frame here is because on the trend, sometimes when you go to the lowest time frame, like 1 minute time frame or 5 minute time frame, you're going to see a lot of noise. So you make sure that you avoid all that one. Select at least the daily time frame to see how you're actually going to do all that thing. The next thing to use here, if you are using the indicator, make sure that you go to the indicators here. You can actually start selecting EMA, that is moving average. You can select absolutely here, and it's going to select this moving average here. But the way you can just see it is actually like following the chart, which means it's not really good at all. So what you're going to do is you're going to set it, click settings, and then because it is selected 9 here, we are going to select 50. So we select 50 mark here. At least you can see the 50 mark how it's reacting. Most of the other time you can select like 200. Now, what you can actually do is you can actually select any average. Like, for example, you can select 200. Sometimes you can click 100. For example, let me select 100. The reason I'm selecting 100 is you actually can go with any that just work with you. I personally prefer 100 moving average. The reason is this, because most of the time, this is actually the point where this moving average is actually going to act either as a support or the resistance of that level. Let's, for example, check this one. If you see this clearly, you see, for example, this point that is selecting here, the market is actually reacting to this point. It's becoming very vital when this market touches this point like we see here. So the moving average is actually going to tell you where the market is actually moving. For example, 100 moving average, when actually the market is trending above the 100 moving average, it tells you that the market is on uptrend. And anytime you're looking for that market, you're going to be looking for buys as long the market is above that 100 EMA. Just look at that. Look as well at this one, how the market actually started moving over this. You start now buying from all this and avoid selling, for example, when the market is above, just like that. And also saying that it can actually act as the support and resistance. Just look at how this market is. Number one, I want to show you how you can actually identify also how the market is really trending. We say the market is trending when the market is forming high highs and high lows. That is basic things that everyone, actually so many people know. For example, look at this. Look at this. This is low. The market went up and created this high, went down, created another high here, went low, created another new high, went low, high, this down, and this is the trend that we are talking about, that this market is indeed moving up. And still you can see the same trend, the market moving here, and you can see a possible where the market is actually going to be moving is a possibility for this market to start now moving on the upper side. That is the first thing that you really have to identify from the market. And from the one go, even by just checking this market, by just looking at things or no things that we have really drawn from the trend line, from the things that we really drawn here, is that this market is absolutely going up. That is the first thing I have to put here on mind. Now look at this. I want to show you how now to draw a trend line. A trend line is a line that connects at least 3 points. If you look this clearly, you realize this market is reacting because it has been touching this point that you see here. I can actually increase the size like 2 pixels. I can put 4 pixels. Look at this. This market has been touching, for example, this region here. Look at that. And we have another region here. Look at that. We have another point here. So those are 3. That makes it to be now a valid. So what do we call this? We call it a valid trend line, because now, number one, how they can be valid is because it touches at 3 points. So when the trend line touches at least 3 points, it becomes valid. So that is actually valid. And don't exclude, for example, don't say that when the candle create a candle, that means a candle and you go to the body. No, just go to, like, for example, let me show you this, what makes it to be more valid. Look at this point here. This is the candle that we are talking about. This is the candle that we are talking about. And that's why I'm dropping it just like that. This is how now the market reacted this. Look at this. The market actually reacted after seeing this. Assume now you actually bought from this area. Look at what actually happened to this market. Now, you have identified of these things. For example, this market is actually going to continue selling all the way up. Now, how are we going to have these entries? Because I was buying. I can show you those entries here because I was buying when this market actually touched this area here. Now, where are we going to have our first entry and where are we going to have the stop loss? Number one, if you are operating on the highest time frame like daily time frame, number one, draw this area and realize that one thing, that this region is becoming so of important on the highest time frame. This is daily time frame. Now, the next thing that you're going to do, you're going to lower this at least to 1 hour time frame to now monitor how the candles are going to be formed right here, right? Number one, this is what you realize here. You realize that this market, after dropping all the way here, there is this candle that is actually being formed here. Number one, we have this candle that actually moved above the previous static closing. We have also this another 2 candle here. So these 2 green candle, they already confirmed that this market is already moving up. So what I'm going to do is I'm going to just wait for this market to drop a little bit, and then I can just have my first entry around that area, and then I can start focusing on this market. Now, where do we place the first TP? That is where you go now to the daily time frame. You go to the daily time frame, and now you can focus on the half of this big market that actually dropped, like here. So in this instant, if we are going to be buying from this zone here, remember now we are going to be targeting all the way around a half of the movement here. This is because the market can decide to continue moving down, but at least, you know, it's actually going to like fill that gap right over there. Now, the risk reward ratio is so important. That is the first thing that you really have to identify. Now, because this market cannot really move below this line here, that is for me, if this market moves below this, then you absolutely know that the market is actually going to move to other direction. So what we do, we put the market just slightly below. Okay, so we put this packet slightly, stop loss slightly below that. And you see the risk reward ratio here, at least you can have a risk reward ratio of 1 is equal to 2, and this is actually going to at least help you now to have and scale this up. So this market is absolutely going to move all the way up, but just to know, in case because we moved to the 1 hour time frame and we confirmed the market probably is continuing to break this way. If you realize this market is going to break all the way down, probably to 197 here, just know there's likelihood the market is going to test this, and this is going to be a breakout of which can be continuous. Now you know that this market is going to head downwards, but because we now moved to the lowest time frame, which is 1 hour time frame, and we confirm this market now shifting and showing the signs to reverse, then that is actually was perfect entry for the buy position. Now that is how you do with the trend. You move with the trend. If you practice moving with the trend of the market, when the market moves up, you move with it. It's not when the market continues or it has been moving weeks and then you jump in, you're actually going to be liquidated. But when you realize the shift of the market has changed, either the market is on the uptrend, you move with it, there's likelihood that you're going to make even more money. Let me show you this theory before I even close this. Assume now you are trading the market that is moving like this. Instead of trading the market that is reversing, assume now this market comes around this area and you buy from this area here, right? Then you see your profit can actually be here because there is likelihood for this market to move all the way, creating these highs here and all the way through this area. So it's very possible you can actually make even more money while trading the trend compared to other strategies. Now let me show you the importance of trending market. This is the reason. If this market is absolutely moving like this, look at that. This is the market that is moving up on uptrend. That is what we call it. If you buy from this zone here and you target here, there's possibility you can actually make even more money when the market is trending, because the market is creating even high highs. That means you have a reason even to scale. This is what you do. If you entered here and you realize the market has touched this and still has a potential of moving up, what you do, you trail the TP. And what you do, you trail the stop loss until you put it to be break even. Break even, that means that trend, even if it moves opposite to you, you're not going to make any loss, but you're not going to make any profit, right? But here, you increase your chances of even making more money. So what you do here is we trail the TP and not the stop loss. So a trending market gives you the chance to trail the TP as the market continues moving up. So that is the importance of trading, and that's why I love this strategy so very much, because it gives me an opportunity to trail the TP, because so many traders trail the stop loss and they end up losing even more money. I think this is the most advantageous strategies you can actually find ever into this market. Let's move to the strategy next in the next video. Ensure that you subscribe, like, and let me know what you have learned in this video.